Greetings and good day, I hope you're doing great. I'm here with you for the daily analysis of global gold ounce prices on May 22nd. After witnessing a drop of more than 3% in gold prices last week, this week the movement has been limited, fluctuating between $4,460 and $4,588. We're on the last trading day of this week.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
And you can see that the price is being traded around the $4,520 range. By examining the daily time frame, we can observe that this week the price initially opened with a downward gap and then fluctuated within a range for the rest of the week. After the price broke below its previous low, it immediately rebounded upwards, and currently, the most important support area ahead of the price is the previous price floor and the $4,450 level. On the other hand, we can consider the main resistance area ahead of the price to be the daily BPR zone. If we see stronger support from buyers for this asset in the coming week, the price could break above this area and move toward higher targets, such as the previous high. However, so far we can observe that a bearish structure has formed. We are currently analyzing the 4-hour time frame. Here, you can see the downward trend we mentioned earlier, and this week's candlesticks are located within this range. After opening with a downward gap, the price quickly filled this gap, and at the beginning of the week, we saw an upward movement in the price of gold. During this upward movement, the price reacted to the 4-hour BPR zone, and immediately after this reaction, a downward move began. In this move, the price was able to strongly break its previous low to the downside and create a lower low. However, in this area, we can observe our second strategy, where we have a candlestick with a high ATR. Next, we see a series of bearish candles that consistently moved lower and lower within the range of this shadow, and in the last bearish candle, the price collected the liquidity of its previous low and closed as a bullish pin bar candle. According to this strategy, after this candle, we can enter a trade, set the stop loss below the shadow candle, and target RR ratios of 1:1 and 1:2 as our profit objectives. We are currently analyzing the 1-hour time frame. From the beginning of the day, we observed that the US dollar, with its significant strength, led to increased risk aversion in the market. In the same way, from the start of the day, we have seen bearish candles and a downward price movement. However, as you can also see here, over the past 2 days, gold buyers have provided very strong support for this asset. In this way, we can expect that after the correction it has undergone, the price can once again form a strong upward movement and head toward higher targets, such as previous highs. And in the second scenario, with the strengthening of the dollar and a decrease in risk appetite in financial markets, the price could continue its downward movement toward the weekly low, and if selling pressure increases, it could even break below this low. Wishing you success and profitable trades.
7 powerful volume trading indicators: footprint, volume profile, and fastest gap. Level up your trading.